In today's gold market update, we're going to analyze the latest 4-hour price action, focusing on how gold is accepting above previous resistance, what this means for a potential continuation toward higher highs, and where the risk zones are if momentum fails. This is a very important phase for gold traders, so let's go straight to the chart. 4-hour structure. Current market state. On the 4-hour time frame, gold is now trading in a strong bullish structure, but it's important to understand where we are in that structure. Price has broken above previous resistance, printed higher highs and higher lows, and continued to respect the rising trend line. This confirms that buyers remain in control for now, and the broader directional bias is still upward. However, the market is now trading very close to premium zones, which means risk management is critical. Key resistance zone, overhead supply. If you look at the upper part of the chart, you'll notice a clearly marked supply zone near the recent highs. This area represents prior distribution, strong institutional selling interest. A zone where price previously failed to continue higher. Price is currently testing this zone again, and the reaction here will decide the next major move. If gold can hold and consolidate above this area, continuation becomes highly likely. If not, a corrective move should be expected. Upside scenario, continuation structure. In the bullish case, the market does not need an aggressive breakout. What we want to see is acceptance above the current resistance, small pullbacks holding above structure, no strong bearish 4-hour closes. If this happens, price can gradually expand higher and target new highs, following the continuation path marked on the chart. This would be a trend continuation move, not a breakout chase. Downside risk, structure failure zones. Now let's talk about risk. Below current price, there are two very important support zones marked on the chart. The first is the rising trendline support, which has already been tested multiple times and held cleanly. The second is the lower demand zone, highlighted as a deeper support area. If price loses the trendline support and fails to hold the upper demand zone, then we can see a sharp corrective move, potentially toward the lower marked zone where buyers previously stepped in. This would still be a pullback within a bullish market unless structure completely breaks. Why this area is critical for traders. This is not a zone for emotional decisions. At current levels, upside potential exists, but downside risk has also increased. Professional traders focus on reaction, not prediction. Either the market accepts higher and continues, or rejects and offers a better opportunity at lower levels. Both scenarios are tradable, but only with confirmation. Market context, volatility ahead. It's also important to note that upcoming sessions may bring increased volatility, liquidity-driven moves, sharp wicks in both directions. This means patience is more important than speed. Let the market show its hand. Let's clearly summarize the outlook. Gold remains bullish on the 4-hour time frame. Price is testing a major overhead supply zone. Acceptance above this area opens the path for new highs. Failure here can lead to a controlled pullback. Trendline and demand zones define risk. This is a decision area, not a chase zone. Trade what you see, not what you hope. If you want to learn how to read market structure, supply and demand, and professional-level price action, you can message me directly on Twitter for one-to-one mentorship and training. If this update added value, don't forget to like, subscribe, and share your gold outlook in the comments. Smart, manage risk, and I'll see you in the next